Hello and welcome to Accounting Information Systems. I am your host, Dr. B. Happy to have all of you with us today as we explore accounting as information. Of course, we're going to talk about what accounting for information systems means. We'll talk about how management uses the accounting information. And we'll also discuss the concept of data analytics and how it's used in accounting. We'll also discuss the effects of demand for information, and we'll talk about the various components within it. So first, let's talk about misperceptions. Oftentimes people think that accounting information systems is just hardware and software to use together to house data. Well, not exactly. It's a little bit more than that. There's a lot that goes into this. The accounting information system is a centralized database that houses the information readily available for management to help decision makers to make decisions about the organization. This centralized database includes things like transaction data, accounts receivables, accounts payables, vendor information, customer information, company information, and much more than that. Information about the levels of inventory, all of the cost information, etc. Is oftentimes housed within these ERPs and enterprise resource planning systems, also known as accounting information systems. So, of course, as you know, accounting requires the knowledge of economics in order to help us to make judgment decisions. We look at this information as, of course, black and white rulemaking, where the information is very clear to us. It's very straightforward, provides useful information for decision making. And of course, the overall framework is that it provides information for the betterment of society and, of course, betterment for the company. The information serves the public interest and requires strong analytical skills to analyze the accounting information that we see. This slide kind of shows us the pathways for critical thinking. This is something that we do on a regular basis, is we need to make decisions based off of the information that we have available. In accounting, we look at information that we consider to be material. Material information is factual, ethical, clear, and validated data that helps us to make decisions. So material accounting information is what we see in order to help us to make good decisions. We input the information, the accounting information, into our database, our accounting information system, right? How do we do that? We use things like computers, tablets, cell phones to input transactions, to input customer information, vendor information, etc. The use of artificial intelligence is, of course, also at play here, where we use artificial intelligence to assist us in putting data into our accounting information system through scanning documents using your cell phone, capturing images, looking through QR codes, etc., to extrapolate the data and enter it into our accounting information system. So by putting the data in, we're able to get the information out. Sorry. So what is accounting information systems? They help us to perform the collection of data, transform that data, and report it. But it's also important to note that the accounting information system also helps us to visualize the information and display it in a meaningful way. And of course, we're looking specifically at accounting, financial data, which is a part of an enterprise resource planning system. So the accounting information systems are typically complex, and the size is varied based off of the company's needs. In smaller businesses, the accounting information system is relatively easy. It's not as complex as it would be in a medium or large size company. The reason for that is because typically in smaller organizations, they use less components of an accounting information system. There's less capability use in an accounting information system for a smaller company because they don't have the need for things like a CRM, customer relations management component. And of course, larger companies, it becomes more complex. It is enterprise wide. So yeah, it's very fascinating. In today's age, the majority of accounting information systems are cloud-based, meaning you can access the information from anywhere and from any device, rather than just going to one computer terminal to access the data. So we collect the data into the accounting information system. It's processed into a meaningful output, and then we're able to see the information. So data goes in, gets processed, and information comes out. Of course, it's up to us, the accountants, to interpret and analyze that information that comes out. So the inputs, of course, are the transactions and the various economic events within the business. We use filters to organize the data, which translates onto our general ledger, which of course ultimately forms the output, which are the financial statements: income statement, balance sheet, statement of cash flow, statement of retained earnings. And then, of course, if the company is publicly traded, looking at things like the 10K, the 10Q, etc. So here we have an example of a cookie company that uses accounting information systems to help the company to organize their data and display the information in a meaningful way. So here we have the mission, vision, and values, and of course about the company. All of this is all company information, right? And so we would take this type of company information and put it into our accounting information system. You might ask, well, why would you do that? It's because we need to display all of the company information for that company in a meaningful way. So here we see the timeline of the company's performance from 2010 to 2022. And we can see the growth model and projections and how the company expanded into what it is today. So started out as an idea and $20,000 in seed money, and then of course it blew up into a full-scale business. 2011, the website launched. Startup incubators. 2012, they started a retail store, then expanded to 3 more locations, then 10 more locations, of 0 to 500 employees, within a matter of 7 years. And then in 2021, 40 different states, 3,000 employees total, etc. So the company really took off from just by looking at this timeline. So you might be wondering, well, what kind of information of this timeline goes into the accounting information system? All of it does. Uh, and how does it go in? Well, we look at the costs of the business. All of the costs get entered through the various transactions that have occurred, through your journal entries, etc. And so all of this type of timeline is the information that we can see based off of that data that we put into the accounting information system. As you know, the idea of any business is to generate a profit. That's why we go into business. Even if for nonprofit organizations, you have to generate a profit to survive. And so, why do we generate profit? Well, it depends on the company's organizational structure and what their motives are. For-profit businesses, the motives are typically for stockholder returns. We want to make sure our shareholders are happy with our earnings, because our shareholders, of course, are interested in the profits. They oftentimes share the profits through dividends and through other forms of compensation. And of course, management is also motivated to generate a profit because there might be something like a bonus involved or something along those lines. But for a publicly traded company, the interest is to make sure that your shareholders are happy because of course, it attracts new investment. When you declare and pay a dividend, it's going to attract new investment, and that's very typical of what we see in publicly traded businesses. So it's really important to understand the business model, the business processes, and events that occur within the organization in order to really understand what the motives are of the business. So when you hear business model, it's the structure of the organization. We talk about who our customers are, what the products that we sell are, the operating plans, the strategic plans, and sourcing of finances, whether it's through operating revenue, equity, or debt financing, etc. So the business model encompasses the overall operations of the organization, in addition to the financing structure. So companies make strategic decisions based off of what they want to do: generate profit, get investor input, identify risks associated with the business, and of course, social responsibilities, to giving back to the community. So oftentimes you might even see the social responsibility part in the mission statement or the vision. Why is the company in business in the first place? What do they want to do? What's the overall objective? And so for our cookie company, one of the responsibilities of the company is to give back to the community. So in this example, we got 390 community partners, donated $11.8 million, and volunteered over 10,000 hours per year. There's a lot of different business models out there to be aware of. There's the franchise model, which is what something like McDonald's would use. The reason why you see so many McDonald's around the world is because of the franchise model. The individuals like myself would purchase a franchise license from McDonald's for a location. They would build out the location, provide all of the branding, all of the resources from the distribution, and that's how McDonald's operates. They use what's called a franchise model. We also have subscription business models. Example of this would be Netflix or Hulu or one of the other streaming services that are out there. There is a subscription-based business model that relies heavily on users paying that subscription fee every single month. That is their model. That's how they generate revenue, is through the subscription fees every month that's being collected. That's their primary revenue stream. Then, of course, the expense there is content generation or acquisition in order for the viewers, the subscribers, to watch those videos. We also have what's called a freemium business model. You may be aware of a freemium business model if you've ever played a game on your phone. For example, let's say you really like the Candy Crush game that you play on your phone while you're waiting for the bus, or you're on the train, or you're taking a flight or whatever. You might play one of those little phone games. Oftentimes, those games are free-ish. They're free-ish. So you download the game onto your phone, you go to play the game, and then it might ask you to purchase, it's called in-app purchases. Purchase coins for whatever, purchase, we call them micro pay purchases. They're micro purchases. That's why we call it a freemium business model. The primary product is free, the game, but within the game there are micro purchases made. That's what builds what we call the freemium model. And of course, we have peer-to-peer businesses, which is business-to-business sales. An example of this would be a medical supply company. A medical supply company purchases their inventory from the manufacturer and then sells their inventory to other businesses, whether it be other medical supply companies, or they'll sell them to hospitals or other health care types of businesses. That's peer-to-peer. And then, of course, we have the direct-to-consumer business model, which is probably what you're most familiar with, and that is the retail store. A retail store is direct-to-consumer. You walk into Best Buy to purchase some electronics, you're purchasing it right from Best Buy as the customer, right? So that's a direct-to-consumer business model. So the business process is a design that helps the business to understand their strategic objectives. Okay. For example, we would move from acquisition and payment processing to converting that payment into revenue, right? That is a business process. So here we have, looking at our cookie company example, we purchase our baking materials, our raw materials. We purchase our raw materials. We convert those raw materials into a finished good through work in process. And then, of course, we sell that finished good to our customers, whether it be online or through our brick and mortar store. That is a business process. We took raw materials, put it into work in process, out of work in process into finished goods to cost of goods sold when we sell it. That's a business process. So in thinking about that business process, we can equate that business process into our accounting information system. When I purchase the raw materials, like the sugar and the milk and the yeast and all of those things for my cookie business, those purchases, of course, wind up as a debit to my raw materials account and a credit to cash, which is the transaction for the purchase, right? That is data stored in my accounting information system through the transactions And then as I am using those raw materials in the baking process, work in process, I'm adding in direct labor, direct materials, factory overhead costs, which means I'm making adjusting entries at the end of each month. I'm processing the information. And then when it moves to cost of goods into out of work in process into finished goods, I sell the baked goods through my website or through my brick and mortar store. And as I'm selling those finished goods, it goes onto my income statement as cost of goods sold. And of course, I'm collecting revenue from my customers through the sales. Sales minus cost of goods sold equals gross profit. And then, of course, I have my other expenses, right? My operating expenses. And so all of that information is stored and then reported out. So the output in the accounting information system here is your income statement, balance sheet, statement of cash flows, statement of retained earnings, etc. So the best way I want you to think about this is think about the physical flow of manufacturing, okay, the physical flow of goods. That physical flow matches the physical flow of the cost in your accounting information system. So our accounting information system captures 4 types of business events. We have operating activities, investing activities, financing activities, and of course, any additional information. It sounds like the statement of cash flows, doesn't it? You know, operating activities, investing activities, financing activities. Yeah, basically, because if you think about it, the statement of cash flows follows the cash, right? And we use the cash for transactions. Yeah. So all of that information is captured in our accounting information system, and it's grouped together based off of its structure. So here we have another part of the business process. And, you know, the customer orders the finished good off of our website. We collect the payment, and then of course we deliver the goods, right? So yeah, it's a really interesting overall process. A couple of questions for you to just think about as we're looking through this information, as we're discussing. Thinking about the physical flow of the goods. As you think about that process, we want to make sure that we replicate the flow of that information in our accounting information system. So let's take a look again, a little bit more deeper look into this this concept, because I find that it's really important for you to understand it. So looking at transaction-based systems in accounting, we think about the cost. We think about the cost. Oftentimes we don't think too much about the non-financial data, but it is important to consider non-financial data as well. So looking at our business model again, we purchase our raw materials. We put the raw materials into work in process, the baking process, move them out of work in process into finished goods, and then we sell those finished goods, right? Yeah, there's a lot of transactions involved in that. You know, the purchase of the raw materials. Within work in process, we're adding in direct labor and factory overhead, okay? And oftentimes some indirect materials, etc. And then after that, we're moving it into finished goods. So there's this, you know, cost of storage, etc. And then the sale. Then we make the sale. But sales, as you know, also has additional costs associated with that. We have marketing, we have the salespeople, we have customer acquisition and retention expenses, etc. So these are the things you need to think about in business, because these related costs and revenue are how the business operates. So this is the business model. When a customer pays us, or when we pay for something, there's transaction fees involved. There are other things that related to that, but there's a process. There's a process. There's a process for purchasing things and making payments. Yeah, absolutely. There's financing, property, plant, and equipment. You got to pay your employees. You got to purchase inventory, and of course, there's other goods and services. All of these are very common resources within the business that we utilize in order to generate revenue. Think about your balance sheet. Look at your assets. Okay, you got cash as an asset. You have property, plant, and equipment. You have inventory, etc. Right? We use those assets to help the company to generate revenue. That's the whole idea behind an asset. So, of course, in thinking about those assets and how they help us to generate revenue, we think about acquisition and payment processes involved in the utilization of those assets. This is a nice visual representation of this. We have the collection of cash from our customers, from the sales. We use that same cash to then, of course, go through the cycle again. We purchase more raw materials in the work in process and then finished goods, and then we sell it again. Use that cash, purchase more raw materials. This business cycle continues. Okay. I think of this example. When I think about this, I go back to what we learned about in Principles of Accounting 2, or in your cost accounting class, about process costing. As you know, process costing involves the continuous development of a similar product with no end in sight. We just continue to make the cookies, right? That's the idea here. And with that, there's a continuous process involved in the accounting information system. So this is what that represents here. So the cash that we collect from the revenue, for the sales from our customers, we use that cash for a couple different things. Yeah, we keep purchasing additional raw materials, but we also have other expenses to make. We have to pay our employees that are in the process. We have to pay our bills. We got to pay our vendors, etc. Sometimes we need to take out a loan in order to get off the ground, or whatever the case may be, or maybe it's a short-term loan for whatever reasons. Of course, we pay dividends to attract new investment, etc. So those are a lot of reasons for that use of those cash. But all of those uses get captured into the accounting information system through the transactions that we enter into the system. So once we've made those purchases, paid those bills, done all those great things with the cash, we go through what's called a conversion process. So the conversion process, of course, involves that cycle we were just talking about. So here we see the conversion process again, same illustration, but of course here we're looking at the production costs. So what related to sales, earlier I had mentioned is things like marketing. We have to advertise the fact that we're selling cookies, which is a part of the customer acquisition cost. We look at customer acquisition and, of course, customer retention. All of those costs are related to marketing. And so we're collecting information from our customers. We're collecting information from our marketing campaigns. to see the overall return on that investment into the marketing strategy. So through marketing, we're looking at conversion, right, into sales in order to generate the cash to continue the business. But we look at that revenue that we're collecting from our customers to really understand the overall business model. It's another thing to think about as you're working through some. It's always good to kind of think about why it is that we're studying this. So let's take a look at the relationship that management has with making decisions through the accounting information system. Management, of course, is responsible for the strategic plan to execute it. And how do they do that? As we're making sales, we benchmark those sales against our goals, right? It's kind of like when you purchase things, you benchmark those expenditures against the budget. Same concept that here applies. So management looks at planning, implementing, monitoring, and changing and improving the process. This is management responsibility. So it's part of the 5 Porters model. Management is oftentimes looking at key performance indicators to really understand the success of the company based off of its meeting its goals, its objectives. So I look at KPIs as a benchmark. If I'm meeting my goals, then I'm doing well, right? If I'm not meeting them, then I need to change something to improve that. So this is a nice visual representation of how management measures those KPIs using the accounting information system for the management cycle. The information that comes out of our accounting information systems needs to be of high quality. We need to be able to use that high quality information to make decisions. That's the whole framework behind it. Accounting information must always be relevant. Must always be relevant. The information needs to be relevant based off of the information available. Okay. Here we see that word again, materiality. It must be material. It must be factual. It must be transparent. It must be validated. It must be relevant, right? So, materiality. Accounting information must be faithfully represented, free of errors. Yeah. True, transparent, free of errors. Accounting information must be verifiable. An external auditor must be able to come in and validate our accounting information as being true and accurate. It has to be timely. I can't wait more than a few months to close out my year. Okay, it has to be timely because you need to be able to make decisions based off of the information available to you on time. Okay, so how did I do last month? I should know how I did last month a few days after that month ended. Yeah. How did I do last quarter? I should know 2 weeks after that quarter ended. How did I do last year? I should know a month after that year ended. Yeah. Timeliness. Understandability. Accounting information must be understandable to the person who does not understand accounting. Okay. Anyone can read a 10K report. Anyone outside of accounting or inside accounting can read a 10K report and understand what's happening with the company. Understandability, very important. And of course, comparability. I need to be able to understand similarities and differences whenever possible. So remember these elements because that's what accounting information system is built on. And of course, we need to be understanding of the Financial Accounting Standards Board, fundamental characteristics of accounting information, and the related elements. But it still holds true that the fundamental characteristics includes relevance, faithfulness and representation, comparability, verifiability, timeliness, and understandable. So, of course, we look at all this information from a decision context in order to help us to make decisions off of the information that we're looking at. Who are the users of the information? Why do they need the information? And what decisions are they making with it? Just some more questions for you to think about as you're looking through the chapter. Now, one of the last things I want to talk about today is the relationship between the accounting information and data analytics. So through the reporting process, we generate the income statement, balance sheet, statement of cash flow, statement of retained earnings. Great, but who cares? How do I tell someone the story? I tell them through what's called data analytics. I take the data generated in those reports and I put it into a dashboard with charts and graphs and clickable information for them to read bits and pieces to the point where someone outside the company can understand from a visual perspective exactly what's happening inside the company. Yeah, that's why data analytics are so important. So we see the correlation between reporting and data analytics. They are becoming so synonymous, so related, where they're becoming very similar. That center where the ellipsis is. They are becoming very, very close. So, and of course, management needs to be able to see that information in order to make decisions. So we see data analytics more and more in accounting, and it is here to stay. And it is very important for you to be able to understand how it works. So I really want you to take a look at data analytics overall. With that, there's some software that you can use, of course. You have Excel. Yeah, definitely. But in addition to Excel, I also strongly recommend that you try to learn Power BI. I think that is a wonderful tool that you can develop awesome dashboards and get great information out of. So yes, thank you so much for your time today. I do want to also remind you where we are in the classroom. So here in week 1, this is chapter 1 that we just explored. You have related to chapter 1, you have a discussion board, and you also have the homework assignment for chapter 1. Well, chapters 1 and 2. So 10 out of those 20 questions are going to come from chapter 1, just so you know. And of course, looking at that chapter just kind of help you to understand exactly what it is that we're looking at. When you look at when you go through this, we just talked about things like business model, etc. So yeah, you'll see a lot of similarities to the things we just talked about and what we just reviewed in the PowerPoint presentation. Of course, you want to read the textbook as well, just to help you to really understand it. But that will help you to answer the first 10 questions of this homework assignment. So thank you all so very much for your time today. If you have any questions, comments, concerns, please email me, call me, set up office hours. I'm here for you all the time. Thank you very, very much for your time today. Appreciate you. Take care. Bye-bye.